For decades, Mohali was known as Chandigarh's quiet, predictable neighbor, a peaceful satellite city built for retirees looking for a slow pace of life. That demographic is turning over. Non-resident Indians and IT professionals are flooding the local market, replacing traditional buyers and shifting the demand for what gets built and who rents it. This influx has driven property prices up by nearly 10% year over year. But for overseas investors, the math on these luxury residential flats is breaking down. While the purchase price goes up, the rental yields are compressing. This chart illustrates the current imbalance. We see a 10% capital appreciation, but the rental yield down here is hovering between just 3 and 5%. That 3% return will barely cover routine maintenance, property taxes, and the currency repatriation fees required to service a mortgage. Relying on a traditional luxury apartment in a high-growth corridor like Mohali to generate passive wealth is no longer a mathematically efficient strategy. The cash flow does not justify the capital locked inside the asset. Smart capital is migrating to a different institutional asset class, sitting at the intersection of real estate and technology, industrial data centers. Unlike a standard commercial office or a residential flat, a data center is a mission-critical facility. If an apartment tenant moves out, you lose a month of rent. If a data center goes offline, global financial networks and cloud services halt. Because of the high physical cost and technical complexity of migrating server infrastructure, these facilities have unparalleled tenant stickiness. Once a global capability center or a tech giant moves their hardware in, they rarely relocate. This comparison matrix breaks down the financial reality. On the left, residential properties offer that 3 to 5% yield, with frequent turnover. On the right, data centers deliver institutional yields of 8 to 12%, locked in with global multinational corporations on 5 to 15-year leases. Those long-term contracts are typically structured as a triple net lease, or NNN. In a triple net lease, the tenant takes full financial responsibility for all property taxes, insurance premiums, and structural maintenance. The investor simply collects the yield. The trade-off for this stability is the entry price. While a luxury residential flat might cost 60 lakhs to 1.5 crores, securing an industrial data center plot requires capital between 3 and 10 crore rupees. For the sophisticated overseas investor, the calculation is clear. The frequent turnover of the residential market is being traded for the passive, calculated security of institutional industrial leases. Establishing a Tier 1 data hub requires a specific triad of connectivity: physical access, deep digital fiber networks, and massive electrical capacity. This pie chart shows the breakdown of a data center's operational expenditure, or OPEX. Power consumption dominates the economics of this industry, accounting for 40 to 60% of a facility's total running costs. To capture this industry, the Punjab government is executing a 728 crore rupee power outage reduction plan. They are building 14 new high-capacity grid substations directly inside the Mohali district. These substations are engineered to provide N+1 power redundancy. N+1 is an engineering standard ensuring there is always an independent backup power source available, allowing for the 99.995% continuous uptime required for artificial intelligence models. On this power tariff chart, Punjab lowered the rate for data centers to 5 rupees and 50 paise per unit. Compare that against Maharashtra at over 8 rupees, or Noida slab rates. Mohali provides a massive 16 to 51% operational cost advantage. Institutional tech tenants are signing long-term leases in Mohali because the state has eliminated the industry's single most expensive operational bottleneck. The Greater Mohali Area Development Authority is mapping this growth through their Master Plan 2031. Recently, there has been a shift in how they execute land auctions. Land previously reserved for general mixed land use is now being prioritized strictly for high-value technology and industrial development. For investors looking at data centers, the most direct plays are located in sectors 82, 83, and 101, which make up Mohali's dedicated IT city. These sectors operate under an anchor industries policy. Instead of auctioning plots to the highest bidding speculative buyer, GMADA allots this land to tech giants and developers who meet rigorous operational eligibility criteria. IT City also holds a critical geographic advantage. It is situated just 1.5 kilometers from the international airport, providing the immediate physical accessibility that global technical teams require to manage hardware. The government is optimizing the city's footprint for economic density. To succeed here, investors need surgical infrastructure intelligence to identify the right zoning rather than relying on general land speculation. The most significant upcoming business landmark is the recently approved Mohali Expo City, a 183-acre development located right next to the airport. The scale of Expo City is large. It includes a 10-acre international exhibition ground and a 5,000-seat convention center modeled after Pragati Maidan in New Delhi. But the true centerpiece of this massive development is the construction of India's first dedicated artificial intelligence tower. This specialized infrastructure is projected to house approximately 300 domestic and international AI-based companies. An influx of 300 tech firms into a concentrated zone is projected to drive a sharp surge in demand for surrounding office space, co-working hubs, and the nearby data centers required to process their operations. Expo City acts as an economic catalyst, positioning Mohali as the Silicon Valley of the North. For early commercial investors, this density of tech firms shortens the projected timeline for achieving target returns on investment. Despite the strong math, there is a legitimate trust gap. Overseas investors are often cautious due to the history of project delays and unauthorized zoning changes in the broader Indian real estate market. The mandatory shield for any serious investor is the Real Estate Regulation and Development Act, or RERA. Under RERA Punjab, every commercial and industrial project must be registered and regulated. Investors must utilize the RERA portal's quarterly updates feature. This tool allows you to legally verify that construction milestones are being met and ensures that the promoter's funds are not being diverted. You should avoid buying unverified pre-launch plots based on verbal promises. Industrial real estate requires rigid, documented compliance verification before any capital is deployed. Securing high-yield digital assets is only safe when your capital is backed by regulatory compliance, professional verification, and a refusal to rely on blind trust. The institutional data center wave is currently in a narrow, early adoption phase, but the window for optimal entry pricing is closing. By 2026, a projected 2 gigawatts of data center capacity will become operational across India. Once that happens, land entry prices in Mohali's IT City are projected to rise, matching the premiums already seen in saturated hubs like Noida Sector 62. Traditional residential property remains a choice for low-yield, hassle-free ownership. But if your goal is wealth creation and an effective hedge against inflation, you must look toward industrial digital assets. Navigating this transition requires local expertise. Nirvaan Acres specializes in translating GMADA zoning laws and electrical grid layouts into actionable, verified research for NRI investors. Secure a future-ready portfolio today before the 2026 expansion reaches the mass market. Contact Nirvaan Acres to review vetted opportunities in Mohali's digital hub.